Hello and welcome to another edition of Trades and Tutorials. This is Jeff Bish, president of MarketGauge.com, and in this video I'm going to take a look at which areas of the market are leading this market higher, and as a result, which areas you might want to consider on any pullback. But why even consider a pullback? Well, we'll get to that in just a second. I just want to make sure if you're just finding us for the first time here on YouTube that you subscribe to our channel. Also know that you can find this video as well as others and links I reference at marketgauge.com/tutorials. And also please check us out on Twitter if you do Twitter. We're at MarketGauge and at Market Minute. And if you're not already seeing this video in HD, all you need to do is click on the settings in the lower right hand corner. It'll be a lot clearer. All right, so it's been a long time since we've seen this page as green as it is. And if you're here for the first time, this page is our sector summary page in the little big view area of our site, which you'll find in the resources section of our site. And here we keep track of the major sectors to give us a measure of breadth, to give us a measure of extremely important time frame of 6-month percent change. It's been a long time since only one has negative on the 6-month change. And just how important is that? Well, we keep track of that right below this chart here with a chart, this chart here, that aggregates all those sectors and counts how many are up and down for 6 months. Now, this is updated on Friday, even though it's a daily chart. And you can see on Friday when the SPYs were just starting to break out, this number hit 13. That's 13 out of 14, I believe. And we haven't seen that in a very long time. And in fact, just to give you a little bit more context, here's the weekly, that's an example. I will take you to what it looks like right now. We'll see a little bit more in terms of history. But what this suggests, especially if it stays up here, is that if the market pulls back, it's a pullback you want to buy. It's not a pullback you want to start screaming top about. Now, why a pullback? Well, check out this 5-day change. Right? These are huge numbers for 5-day changes. The other thing that's incredibly interesting is the XLUs, which has been a leader, is now down on a 5-day basis. So there's clearly some rotation. And the rotation is coming into some interesting places. And that's what I think you're really going to want to focus on for the next few weeks, maybe the next few months, depending on how this market holds up. And the reason to focus on it is because it's not necessarily going to be the strongest year to date or the strongest 52-week stocks that are going to be the best ones to be in. We have been in I would say, rotating bull market. You could look at it as a rotating bear market for quite some time now. What I mean by that is that the sectors have gone through their own bull and bear cycles at different times, and as a result, the market seems like it's gone nowhere, but in fact, underneath, we've had some really good moves within the sectors. So if you're not already watching this sector stuff, you absolutely should. What you see here is free at Sector Summary. And also, Mish, in her daily commentary, covers these sectors, and she does it in a way which she calls her modern family. Now, her modern family represents 5 sectors and the IWM. I'm not going to give you a whole dissertation on the modern family because the point of this video really is to show you how leadership is beginning to change and change in a rather interesting way. So the way that we do that in a very simple way, and Mish covers this every day in her daily. If you're not already getting it, I'll put a link above this video, but you can get it at marketgauge.com and then go to Mish's Daily in our resources section. So the easy way to do it, not only for sectors but for individual stocks, is using our triple play indicators. And so that's what you see down here at the bottom of each one of these charts. So I know that the charts may be hard to read because I've got them in such small font. This is XRT, retail, IBB, again, ETFs here, which is biotech. Then SMH, which is the semiconductors, IYT, which is transportation, and KRE, which is the banks, and then IWM, which is the broadest measure of the U.S. stocks. A couple of interesting things to point out that have happened, and then I'll blow it up for you to make it even more obvious. The first thing is markets are breaking out to new high. We want the consumer to be strong if that's happening. Well, XRT, which has really struggled throughout the spring here, has now begun to pick up a new leadership position. And how do I know that? When this price leadership, which is the top line, blue line, goes over the red line, it means it's demonstrating good price leadership. The bottom line here is a volume leadership, and that means its volume pattern is improving, and that's looking much better too. Now the same thing has just happened with IWM. So if you want the market, and I'm not saying that XRT always has to lead the market, in fact we'd really like to see the financials lead the market, and they're not quite there yet. The interesting thing though is volume is picking up, but what you will notice is the broad market is picking up. And you can see for the first time, we've got IYT now is starting to poke its head up. That would be a good sector to lead to further moves in the overall averages. And the semis, which had a really nice run going into May and then June, you can see that in their leadership, did take a break with Brexit, but they're right back in the saddle. So if we've got technology and we've got the consumer, and even better, if we could also get transportation now demonstrating some leadership, even though they're not at highs, right? These aren't breaking out to new highs, but they could be demonstrating that money's rotating into them. Now, what makes this more interesting is let's make XRT a little bigger here. Actually, I'll do this. Let's make XRT a little bigger, and then I'll turn this one into some of the other areas that have been leading the market, and we'll look at them kind of in parallel. So about the same time frames. All right, so that's about the same, and I'll do this so you can see my cursor in both locations. All right, so what I want to point out is while XRT, so the blue line is kind of snuck up over the red line here on both price and volume during this consolidation, and this blue line is the 50-day moving average. So when it came up to that 50-day moving average and then started to poke its head up, this, on a triple play perspective, had price leadership looking good and volume leadership beginning to look good. So a breakout would be one that you would look at favorably, even though it's basically in a bear phase or coming into a recovery phase, which is the 50 under the 200, right? Not one that you'd expect a lot of strength from. Now, if we contrast that with what has been leading, the XLUs, you can see that at the time that the XRTs started to show some positive, the XLUs were actually beginning to start to roll over. All right, so there's your rotation. This is a good rotation. And if we go look at XLP, so these are consumer staples. All right, those two, which had been leading through June, had started to roll over. Now, the volume pattern in here is very compelling for XLPs. So I don't want to write off XLU and write off XLP, but what I do want to highlight is that you've got a index now, or a segment of the market, XRT, which has been more or less hurting since April, and you can see that while the overall market has had its ups and downs for sure, it's done a lot better, and XRT just really hasn't participated. So with this turning up as it is right now and the market breaking out, there's a good chance that some places like XRT would be a good place to go looking for some stocks that have been beat up, and when bigger traders start to look around and say, I don't want to buy the new highs, what are some of the things that may participate in the rally without buying new highs? You're going to look for the stocks that are demonstrating new leadership. And so you can see Nike has been one of those. Now, Nike doesn't have, as far as I know, a high weighting in XRT. However, you can see it's a retail stock. It too, when it broke out through the 50, has had a nice run. More importantly, its leadership has picked up. Its volume has picked up. So the market's broken out to new highs. You may not want to chase it. But if I can sum up what we've been talking about, if it pulls back, these areas of the market that demonstrate new leadership could be the best areas to look for opportunities that are not overextended, but still in a great position to have turned and to lead the market higher if it's going to make another run higher. Now, why would I think that it's going to make another run higher? That brings us back to the sector chart that I was showing you earlier. So here's the chart that we post. Here it was on Friday, right, when I showed you earlier in the video. But to give you some context, this high level of 6-month positive groups, in other words, the number of groups that have a positive 6 months change, we haven't seen this consistently in a very long time. Now, it doesn't mean, if I scrunch this up, right, it doesn't mean that the market has to go higher. It doesn't mean the market can't have a sell-off. But what it does mean is that if you know how to buy a pullback, and this was like a flash crash, but if you know how to buy a normal pullback in an environment where you've got this many groups that are this strong, it's a time to look for a pullback. All right. Now, the way you do use this indicator to keep yourself out of trouble is this green line here is the 200-day moving average. When you get under the 200-day moving average and you have a lower number of groups, then you want to step out of the way. So in here, you wanted to step out of the way because you dropped below the yellow line and below the 200. Same thing was true in here in January. But right now at 13, I would say as long as we maintain, say, over 8, and the market pulls back and holds in this support in here, let's call SPYs around 210, this would be an ideal place to start looking for the market to turn up and to start looking for the stocks, as I was just pointing out, that have good price leadership. All right, so if you want to learn more about the price leadership, I will probably put a link to it in the text above this video. I'm doing a webinar on it later this week. If you want to learn more about Mish's Market Minute, which is free, get it every day, go to marketgauge.com/tutorials. Sorry, marketgauge.com free resources and look for Mish's Daily. Hope that helps, and I'll see you in the next video.